Welcome back. Still very busy earnings season. Let's get in a little edition of Earnings Exchange with the action, the story, and the trade on three consumer favorite categories: live music, shopping, and chicken. They don't all have to go together. Here with our trades is CNBC contributor Gina Sanchez. She is chief market strategist at Lido Advisors. Gina, it's good to see you. Let's start with Live Nation. The stock is up 5% just in the past week. It's benefiting to some extent from the Trump victory. Wall Street now betting it'll clear the way for them to settle with the DOJ in the antitrust suit. Not the only bright spot either. Morgan Stanley saying healthy demand for live events, more deal making could boost them in the year to come. What is this name for you here?
So this is actually one that we own and have owned for a while. So, this is a stock that has a tremendous margin, strong expectation for growth. And I think a lot of that is largely priced in. So that's the challenge to this stock. And to some degree, that kind of Trump bump that you're describing, which is the election boost that might get them towards a settlement with the DOJ, that is also priced in. That said, even before the election, you already saw a lot of support for the stock, meaning that even if they had to, sort of go to the mattresses with the DOJ, they still had enough margin. This is an incredibly high margin business. And so, I do think that this stock actually looks good regardless. It just looks slightly better. The challenge to any investor right now is that it is well priced.
Exactly. 61, I think they just showed for that PE. Gina, let's move along. Quickly talk Shopify, which has been kind of struggling ever since its 2021 highs. It's up, what did it say, about 15% this year. It's about to report. You like it or you stay away?
So actually, this is also one we own, and we still like this stock. This is a stock that has shown that its base of users is very solid. They've got some big names in there, and they've been able to upsell those names. And so you can say this is a really solid stock from that perspective. The challenge is growth. That said, they tend to guide very conservatively, and so they're probably set to beat on earnings, and their growth trajectory looks pretty good, even with that caveat that I described, which is that they're going to have to work hard to continue to add users.
All right, you're feeling sort of constructive, I sense, on things today. How about Tyson Foods, which is off 4% in the past 3 months or so? They continue to face a number of headwinds. They got a downgrade from Piper Sandler earlier this fall, citing unusually unfavorable beef and chicken pricing. Drought conditions could pose a risk to production. This quarter's results will be the company's first with the new CFO officially at the helm. What do you do here?
Well, so this is one that we've stayed away from. And one of the problems here is they also have, within their beef segment, which has been a real trouble spot for them, they've simply been unable to grow their herd. And so they have capacity limitations. And so while you can argue that the rest of the business, which is chicken and pork, have done OK, this is still a headwind for them. And they just can't seem to catch the momentum. Every stock right now has caught momentum. If this stock cannot catch momentum in this market, that's a sign.
It's a great. Are we back to meme mania? What is going on here, Gina? What do you make of all of this?
Well, I think there's a lot of emotion happening right now, and I think that investors are not really looking at fundamentals right now, and there's a bit of euphoria in the market. And I think that once we get past that euphoria, we're going to have to contend with the fact that interest rates are likely going to stay higher where we're going, and that's going to be a challenge for all valuations, not just the valuations we've described here, but all valuations are going to have a sort of good reset, and that's the big question.
All right, Gina Sanchez, thank you in this edition of Earnings Exchange.